What's up, everyone? Welcome to Proof of News. This is our first episode. I am your co-host, Whit Gibbs, here with my illustrious co-host, Ethan Vera. Ethan, what's up, buddy? Welcome.
What's going on, Whit? I've been asking you to pay me for some time on your podcast, so excited to make this into reality. Let's do this.
Yeah, it's going to be a lot of fun. I'm excited for us to get this going. And why don't you tell people why we decided to do this all of a sudden?
Mining industry is opaque. I mean, it's probably getting better than it once was, but there's still limited mining news out there, limited insight beyond the kind of Twitter headlines. So who better to talk about it than someone like yourself who, is on podcasts with a bunch of the miners and, me coming at it from the mining angle too. So I guess it's really just let's deliver better information out there than exists.
Yep, this is going to be exciting. I'm excited for everyone that's tuning in and going to watch this show. Hopefully, this adds some value. I think that Hash Rate Podcast has done very well in highlighting great people within the space. Proof of News is going to be a show focused on just that. What's really going on this week in mining, and we're going to talk about hash rate and all of the things that matter and are the centrifugal forces of the Bitcoin mining industry. So. Getting right into it today, kicking it off with the mining news. Why don't you start off with the first story that we've got here, Ethan?
Yeah, let's kick it off with the most exciting, the Tiger King drama at Bitmain. It seems to be the most topical today.
Yeah. What's your take on the McCree versus Jihan situation?
The irony behind the company forking itself after they participated in so many forks. It's awesome to watch. I think overall, it is impacting a lot of miners, but there's also the ones that are benefiting from it. What's Miner, notably, some of the other manufacturers, but pretty much anyone who's running ASICs right now that weren't planning to upgrade to Bitmain machines, they're going to benefit from lower levels of difficulty in the future. So while I think some people are obviously feeling the pain, there's parts of the industry that are celebrating for sure.
So my understanding of the story is that, I mean, they've obviously the split's been very public, and there's been, offices stormed with security guards and fights over a piece of paper, it seems, right? Who's holding the license. And now my understanding is that Jihan has the relationship with TSMC. So he's controlling chips, and McCree has the relationships with the factory. So he is controlling manufacturing. Is that correct?
Yeah, Jihan's quickly trying to add manufacturing. So I heard he's spinning up a new manufacturing plant in Shenzhen. I think Malaysia is still on the table. So Jihan's quickly trying to get that part, but it's a huge supply chain that McCree owns. So it's going to be some time before Jihan can actually start pumping out new ASICs to the quality that Bitmain has done for the past few years.
Yeah, I mean, hopefully they can skip their type of quality for the S17s and just keep it from S19 to S9. Those two machines are, well, the S19s are I guess still yet a bit unproven, but they seem to be better. So how does this really impact the industry? I mean, are we going to see the shipments that are supposed to go between now and end of the year actually hit the mark and ship when they're supposed to?
All of McCree's chips that he already has, those machines will ship because he can finalize them and send them out. But you got to think that this impacts anything after that. And especially as a miner in North America, like you're going to place $1 million order with Bitmain. Who are you going to place it with, McCree or Jihan? And, will that entity be around in 3 to 4 months to actually deliver on your order? I think there's a lawsuit pending in Cayman Islands right now with both of them. So the future is uncertain, and any miner that prepays for machines is taking a massive risk right now. So I wouldn't bet on it personally. I would not be putting out any significant capital to Bitmain unless I had some personal guarantee or personal relationship with one of them.
Yeah. That could potentially impact, God, when you think about hash rate, and I know we're going to talk about this in a bit, but when you think about the impact that that's going to have on hash rate and difficulty as we move into Q4 of this year, when all of these new machines, theoretically will be coming online, that's a big difference and could have a substantial impact on some of those futures markets that are out there. But, you know, before we get into that, I know there's some other drama that's kind of going on right now. And hash rate, you know, had a little story about Northern Data in one of our previous newsletters. And, you know, we just pointed out some of the facts that were already out there. And since then, it seems like, you know, BTC King 555 on Twitter has, I mean, I can't say he's taken up the cause because it wasn't really a cause like that when we were covering. It was just relative news that we thought made sense at the time. But he's got a chip on his shoulder, a vendetta or something of the sort. That's just, I mean, he's going at these guys.
Do you think that's a chip on the shoulder or some type of like moral obligation? What do you think motivates him really?
So I would like to think that it's a moral obligation, right? I would like to think that it's done out of some, you know, some benefit to the space, and it could be, right? God knows I don't want him coming after me for misstepping on his motives. But I don't know. At this point, it seems personal. It seems like you know, you just think of situations like this, that if you've ever been in a situation where you've had a grudge against someone, this seems like it's moving past okay, I've got some news and I want to share it, into the dog with a bone, or, you know, dog on a bone that just can't let go of something. So I don't know.
Yeah, he messaged me on Twitter once, and I said, "Have you checked out MindBest? Because it's an easy target for him." But he mentioned that
Savage.
he's only interested in companies that are like going public or are
Mm-hmm.
public. So I think that's his focus. And for people who aren't familiar with Northern Data, they're a publicly listed mining company based out of Germany.
Mm-hmm.
Um, the reason he's going after them is really their valuation. They're valued at some 20, 30x multiple of the rest of the mining companies. And a large part of that is because of how they framed the company with high performance computing and kind of not just Bitcoin mining, but getting into generalized compute. So that's where he's really taken up an issue with them, amongst other things. But I think if their valuation was in line with everyone else, he probably would not be targeting them. Because to be honest, there's a lot of not very great run public companies out there right
Mm-hmm.
now,
Right.
but their stock price reflects that.
Well, and I mean, when you look at crypto as a whole, right? We talk all the time about there needs to be self-policing. Obviously, coming out of the ICO crap of 2017, that was, you know, ever present and front of mind for a lot of people when it came to, you know, other companies that were springing up. And it's only natural that there's a certain level of policing that goes into the mining space as well, and us as a community holding people accountable. You know, the Northern Data situation as it is, and I don't know who's handling their PR or what's going on with all of this, but the way that they have come back on some of these challenges to the way that they're operating or questions about their business, it seems to me like just a piss poor way of going about it. You know, going on the offensive and saying that it was a smear campaign on Twitter, while not actually addressing anything really, and then, you know, doubling down and like suing Twitter to get access to information. To me, it seems counterintuitive. It seems like something that a guilty person would do, right? And I don't think that they are. I think that they have a good business, and I think that they just want to grow it and they want to get the most value out of their company that they can. I think that, you know, as a CEO, I can totally understand being excited about your company and maybe, you know, saying a bit more at some points in time and embellishing. That's human nature. And you know, I understand that they're publicly traded and that has different repercussions. But at some point, it would be good to just see Arush come out, the CEO, and like make a statement or do an interview or something to clear the air, because I don't see this stopping until there's some kind of like real like press that connects with other people, right? It's so impersonal right now, the way that things are being handled. Like, it's hard for people not to see it from BTC King's point of view with the way that they're handling the PR right now.
That's a great point. Maybe it's the circles I hang out in, but I haven't run across any of the Northern Data guys really in Telegram chats, in videos and podcasts, Twitter. So they've kind of stayed sidelined in the industry, which obviously raises like some red flags with industry insiders who are these guys who are, claiming one thing, but, we can't prove it because we don't actually talk to them face to face. So it would be nice if they came out and, they should have them on the Hash Rate podcast. Talk it
I'd
out.
love to. I'd love to have them on. And look, one of my beefs with the situation with how they talked about their business, and who cares? Their projections are their projections. That is what it is. Their business. One thing that was said in their defense that really just irked me is, someone trying to justify that Bitcoin mining is in fact high performance computing. And that's fine. Like, yes, draw that correlation. You could also say that hash rate and compute are the same thing, right? But I think that there's not a world in which Bitcoin miners think that what they're doing is the same as what AWS is doing, right? Like, it's not the same. And to come with that rebuttal is lazy and honestly just makes them look guilty. Like, all of these things, like whenever someone does that, it's like, it's short-sighted. But yeah, I would like to see this all cleared up. I would like for the air to be, cleared, and Northern Data is a massive example of something that could go incredibly right and put a positive spotlight on mining, right? And that's what I'd like to see. I'd like to see them come out of this better than, they went into this story, and hopefully that happens.
Yeah, I like your perspective on that, because as much as infighting happens and we want to call out people for maybe, being bad actors, at the end of the day, we also want to be supportive of each other, because this isn't completely a zero-sum game. We can build this ecosystem together. There's many areas of mining that will benefit from new entrants coming in and getting favorable views from the outside world. So I think we should definitely call out certain people and companies when it's necessary, but not have that mentality all the time, and really try to be supportive. And maybe it may seem like a foreign concept now, but innocent until proven guilty type thing, versus I guess where society's heading.
Well, and I mean, how do you participate in Bitcoin and you not actually live up to the ethos of like letting the market decide, right? Like, one of the big components of of self-sovereignty is having the ability to, vote with where your capital goes, and have that level of self-sovereignty and, free market capitalism. And, policing is one thing, but sabotaging a business or just slinging mud to sling mud doesn't do any justice. And I mean, they're onboarding some massive clients. Like, no one's going to say that SBI crypto is a scam. SBI crypto is certainly legitimate and backed by, huge financial institutions that are very well to do. And some of their other partners, same thing. Like, I know some of their partners very well, and I respect them and I respect what they're doing. Again, it's just, I hope that they can turn this all around and it comes out better for them, for sure. So, moving on to another topic, and a company that I know we've both grown fond of, and we like what they're doing in the space. BitUda is in the news again with their new mining report that they were commissioned to do by Fidelity. Do you have a chance to dig into that report?
Yeah, I read through it. It was great. So recommend anyone checking out the report. There's really only been a few reports to date. CoinShares, Token Insight, a few more. CoinDesk had one. So it's awesome to see more reports come to the space, and I think the more reports, the better. So happy those guys did it.
So yeah, I think we should. It's like 50 pages long. I think we should take the next 20 minutes and just go page by page. If you want to share your screen. No, I'm just kidding. Look, it was a great report, and I think they did a fantastic job. Sam is, I mean, he's fucking awesome. Like, I don't know how else to say it. I really enjoy talking to him. I enjoy his insights. Obviously, Tim Kelly is a wealth of knowledge as well. I can't take anything away from that guy. But this report, it was just bang on. Like, they did a very good job of talking about the aspects of the industry that make a difference. And there needs to be more of this stuff. Like, I think it took them, it was no small undertaking. I think it took them a couple of months to put together, maybe more. It would be nice to see something like this monthly, like a state of the industry every month.
Yeah, and by multiple people too. you see in articles, oftentimes people are setting like electricity costs or how many hash rate, like how much hash rate is expected to be on the network. It's not great when it's just from one person and one company doing a study. So Biduda coming into the space to join the existing reports and hopefully more people, like then we can start aggregating this data. Because although like I did appreciate Biduda's report, I think there are some controversial views there, especially around like electricity price and hash rate estimates, which is great that they did, but I definitely don't think that it needs to be taken as a Bible.
Sure. Well, I mean, all information that's currently being shared comes across as a best guess, right? You can't really read any kind of research in an industry that's 10 years old and really only been studied as it should be for the last really 2 to 2.5 years. There's not really just a way yet to properly even gather data, right? I think that's one of the things that I admire about Leo Zhang and the way that he does some of his reporting is he's methodical with how he researches, and his research is approached from a few different angles and very well thought out. And again, can't take anything away from Biduda. I know they put a lot of work into it and the research was done very well, but to your point, it's tough to take anything as gospel when it comes to research in this industry. I mean, I know that you guys are doing some research, man. Have you guys thought about doing a monthly report?
Because of our operating company, it's a little bit like conflict of interest. So Cambridge reached out to us to start giving some of our hash rate data over to Cambridge. I think that's a great initiative, but at the end of the day, we have an agreement with our users on our platform. And so some of the data we definitely wouldn't be comfortable sharing. I think aggregated, it is different, but I could see us starting to leverage a little bit more data that we have in a way that protects our users' privacy.
That's a delicate balance, right? That's the tightrope to walk, because otherwise you fall into, well, not you, but the industry falls into the same situation that big tech is kind of hitting now head on. I know it's a little bit off topic. Did you see the hearings yesterday at all? Did you watch those?
I watched about half, yeah.
Oh man, so uncomfortable.
Why would they structure a hearing where they ask questions and they don't even listen to the answer though? And I think the hearings are good because it shows that America actually keeps its companies at least somewhat responsible, even if nothing comes out of this.
Yeah.
Versus like Alibaba or Baidu could run around and like, who knows what they're doing. I like the idea of more transparency, but at least let them answer the question. It's just, it makes no sense to cut them off.
Yeah. And, a part of it's grandstanding, obviously. I think like American politics at its finest. We've got, an election coming in, 3.5 months, 3 months now. But one thing is for sure, Facebook's got to go, man. Like I have never felt more uneasy by a person's answers ever in my life when they were asking him about, ripping off competitors as he's trying to buy them. Oh my, I mean, like, damn, dude, I felt so bad I was just short it to the fucking ground. It's got to go. It's got to go. But anyways, I'll not go too far down that rabbit hole. I know this isn't a tech podcast in that regard. Last story that, we've got a couple more, but one that was exciting, that was recent, and I want your take on, because I know you've done some very detailed research on this. BTC Top, or BTOP, as their website is, they've launched their new joint mining model, which is an inventive take on cloud mining. What did you think of that when you looked into it?
It's switching the economic model around, but it's the same product at the end of the day. I get really excited when I see any of these models though. Like hosting companies, for example, they only used to just charge a flat fee per kilowatt hour, host with us at 8 cents a kilowatt hour, and that's it. But now you're starting to get into more interesting splits where they do some revenue share, they put up some upfront capital, it's over a certain return. So I love these innovative solutions that people are experimenting with and ultimately finding better products for miners. This new announcement with the cloud mining is an example of that, where they're switching up the economic model. And the reason I think this is cool is because historically it's all been a management fee. So whether it's a mining pool, cloud mining contract, hosting, it's just been a flat fee where the provider gets paid no matter what. And that's existed in a lot of traditional industries like asset management, where they may earn 2% of the portfolio throughout the year, regardless of performance. But we go through these cycles in finance where it's set as a certain percentage, but then it'll cycle into more performance based. And really, like throughout the years, people change their preference if they want performance based or just set. And so now we might see the next cycle of crypto mining services, whether it's cloud mining, mining pools, hosting, turn into performance based. So how this relates to mining pools is profit switching is obviously becoming mainstream now. Binance announced theirs. Pretty much every Chinese major pool is doing profit switching. We're obviously doing it at Luxor. That's probably going to change to performance based pretty soon. Right now, all the pools take like a 3% fee on profit switching, but what it should be is like a 20 basis point flat fee, and then half of the uplift over Bitcoin PPS rate. So I'm excited to see how this industry transforms in terms of actual payment and compensation to service providers.
So are you going to run a test on these contracts? You going to try this one out? I know you've tested out a bunch of others.
I might as well. I mean, they're usually. It depends how expensive they are.
I was going to say we gotta test this out, and we need your data, because I think as of now you are 0 for 6 when it comes to finding one that's profitable, something like that.
Yeah, a bit under. I think 0 for 4.
0 for 4. But okay, so
I'm O is the important part.
Yeah. Oh, yeah. There's none that have been profitable to this point. Who knows? Maybe they timed it perfectly. Isn't BTOP like a Bcash pool mostly? Isn't that really like their claim to fame, or isn't that how they got most of their hash rate?
Yeah,
cool.
And BTOP is an interesting entity that they somewhat deprioritize profit over control of hash rate. What mining was really meant for, proof of work, was consensus. And so getting back to the roots of mining beyond economics, like BTOP really actually cares about controlling a large amount of hash rate, so that in the future, and things like the Bitcoin Cash fork, they can have a more important part to play in it.
Yeah, I mean, clearly they know how to make positive choices when it comes to which fork to support. Anyways, Bitcoin Cash sucks. When we dig into this next story, I think it's going to be a nice segue into talking about hash rate, and specifically, viewing some of the stats that you guys are now showing on Hash Rate Index, which is an awesome website. If anyone is listening or watching and hasn't checked it out, link will be in the show notes. You can check it out. But before we get to that, Three Gorges Dam, which is one of the largest dams in the world, maybe the largest dam in the world, massive freaking structure, and holds back enough water to potentially flood out and do harm to 400 million people, is right now on the verge of collapse, right? So nice little graphic here for everyone watching. You can see top left corner of the picture, you've got the Three Gorges Dam, and the affected area is there in the multicolors, so you can see the severity that all goes around the river there. So you're talking about a tremendous amount of people. That's more than the population of the United States, right? All that would be affected by this dam's collapse. It's kind of weird to even talk about it in this way after we've just talked about the catastrophe that could cause to like human life. But what's the potential impact on the mining industry if this thing fails?
Yeah, I guess I should probably chime in there too, that the mining industry is a second consideration here.
Yeah.
At the end of the day, this is millions of lives we're talking about. So while we are looking at it from mining perspective, obviously there's just so much life here at risk that I hope that it doesn't break or anything happens, right? So it generates about 2% of China's total electricity, and it's the biggest dam in the world. So this is huge for China. I think it's become pretty much the pride of the CCP. This was seen as one of their largest engineering, you know, accomplishments. It's a signal to the world really that the nation, stepped into like an elite tier of economic powerhouses. So there's a lot of pride that goes into this. And it's hydro dams are like a discipline that's been studied in China for 2,000 years. It's deeply rooted in the Chinese culture. So I don't think they're going to let this dam break. There's too much at stake here to let it go. They may sacrifice, upriver communities by allowing some water pressure out, but I don't think they let the dam blow itself. Beyond obviously the economic impact, it's also just that could be the end of the CCP because they've backed it so hard, and it's shown as kind of their symbol of power.
Okay, so I mean, I guess we can save the really for another show, right? Because the end of the CCP is that would be insane when you think about it. Yeah. But it's a good point in kind of sacrificing the upstream or upriver communities that are there. Man, this is a tough one. There's so many factors at play here, and at this time of year, obviously it's rainy season, which is why there's such immense pressure that's going on right now. What is the impact though? Like aside from life, if this impacts mining at all,
yeah,
how does this change the dynamic in the region?
Yeah, so starting with probably the least talked about is the manufacturers. So there's a lot of manufacturers based in Wuhan and Hangzhou, which is Canaan and Shanghai. So there could be some supply chain disruptions from machines through this. But I think the biggest impact probably is on the hash rate production itself, mining farms located in these regions. So you can see here on the visual, like as it flows down towards the east, it's going to be running into a lot of the areas that have mining farms. And these mining farms are not necessarily elevated. And these places are expected to get like 7 to 10 meters worth of water if it breaks. Wow. So immediately, like these things are going to go underwater and entire farms are going to be shut off. I don't know the direct hash rate impact of this, but I think it would be pretty significant to the network. So in any model where you're forecasting hash rate, you should at least factor this in. Maybe you think it's a 0.01% chance, but it needs to be in your model in some capacity.
Wuhan can't catch a break this year. This is not a good year for Wuhan. God, I hope everything is okay there. Leading into, and this is a tough one to segue out of, right? All the best to everyone there. Hopefully this ends well and that dam doesn't fail, and hopefully they don't need to flood anyone with 7 to 10 meters of water. For all of our Americans that are listening, that is super deep. I mean, you're talking 21 feet, 21 to 30 feet of water, which is a lot, anyways, jumping into the hash rate index, I know this is something that, leading from Three Gorges Dam into this topic, there's a clear correlation. But before we get into that, I want to know, why did you guys spend the time to put this resource together? It's fascinating to me. I know a lot of people have seen it and they love it. But why? What was the motivating factor behind getting hash rate index started?
People for a long time have been talking about moving hash rate from China to North America. That's been like the theme as long as I can remember, which, it's been pretty much talked about the past year straight. But what does that actually mean in reality? I think we need to look at the factors that are holding back North American investors from coming into the space. And one of the biggest things in my mind is how opaque and untransparent the industry is. North American miners or investors are really uncomfortable putting in capital into supply chains they don't understand, into liquidation platforms that they can't verify. And so we built this website really just to help that process. And I think by leveraging this data, investors will get more comfortable writing checks for mining operators to start building out more capacity here. And that's healthy for the overall network. I think it's really important that we start to get more hash rate out of China and into areas with less centralized control of government. So that was kind of our view on it. And then it's really been user driven. So we've just basically built stuff that miners wanted. We reached out to a lot of miners. We're like, hey, what would be interesting to see? Let's just go try and build that for you. And so that's how it's come about. And that's how we plan to continue to iterate on it moving forward.
It's awesome. We'll bring it up, man. Let's see this thing.
So yeah, here's the homepage here. This is the hash price, which is a new term that we're trying to use for the value of hash rate. One of the most, in my opinion, most misunderstood concepts in mining is that hash rate itself has value. So here's a tracker. We're looking at a 30-day view. You can track through the value of hash rate. And this, at the end of the day, this is how much miners make in revenue. This is all they care about from a revenue perspective. So this is a really important metric for them. You can see here over the past few days with a recent increase in Bitcoin price, I think we'll get into in a second here, but there's been a little bit of an increase here. And it also fluctuates with difficulty increases. So in July 13th, we saw that difficulty change, and you can see that little drop off in value. So there's so many factors that go into the value of hash rate, but at the end of the day, you need to pay attention to this value if you're a miner, because this is what you generate your revenue off of.
So that being said, how are you compiling this data? Where are you getting, because obviously there's a ton of miners with, different costs of production. How are you drilling down to this average?
Really, hash rate is traded between miners and mining pools. Mining pools buy hash rate. And so at the end of the day, miners get whatever price mining pools are willing to pay for that hash rate. And so what we did is we took an internal view of what the weighted average value of hash rate is trading hands at across mining pools. So we used what's called a full paper share method, which is what mining pools generally pay out on, which is paying the expected value of both transaction fees and block reward. Then we assumed a weighted average pool fee across, and then that's what we perceive as like the weighted average value of hash rate trading hands. It won't be 100% accurate. It'll probably be off by a factor of 1 to 2% because we don't have the true fee that pools are charging or their basis, but I think it's within probably 2% at least. And then as we get to more market-based pricing systems like exchanges, that's when you'll get an actual price for it.
So you alluded to this, but there's been some positive price action in Bitcoin over the past week or so. Now I think we've reached 11K. We reached as high as I think 11,280 or something along those lines. So it's showing now that profitability is going up. What's pre-halving, there were some thoughts of where that priced floor was for miner profitability, and that below that price we would see capitulation. It would seem that has not necessarily proven true. But as we're moving forward now and there's positive price action, how are you seeing a correlation in the price movement and the hash rate and difficulty levels?
So I think there's a common misconception that hash rate follows price, which is partially true. What hash rate really follows is the value of hash rate. So the value of hash rate is what actually makes miners turn on their machines. And so that's really the leading indicator. The value of hash rate, like you said, it's increased pretty significantly here recently because of the Bitcoin run up. And that's going to lead to an increase in hash rate, which will then turn into an increase in difficulty. So we are starting to see that now. Right now, it's being reported that hash rate's at around 128 exahash. That's self-reported hash rate, pulling off of mining pools APIs. I think Coinmetrics putting it at 124 exahash. So we've either reached or surpassed pre-halving levels of hash rate already, which is crazy to think about, that the block reward decreased by half, and yet we're still, higher than we were at the beginning of the year. But I think we'll continue to see that hash rate increase over the next difficulty adjustment period. We got 11 days left. It'll probably increase somewhere in the few percent range as more hash rate comes on.
So I got to ask, right? I think everyone saw it right before the price really took a turn up. There were some select tweets from very, 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 very large bag holders. And then boom, what do you know? Hey, you get a tweet, "Are you ready?" And then the price pumps 2K. Was this a manipulated move?
What do you think?
Fuck yeah. like where I come from with this market, I don't think there's enough new interest for it to be for it to be a, you know, a non-manipulated move, let's say.
Yeah.
Um, what are
Who
your
do you think
thoughts?
are the
Nah,
entities that would?
nope,
No.
not that. I don't know. People with lots of Bitcoin, let's say.
Yeah. Well, some speculated that it was some of the manufacturers were part of this as they're struggling. Pump the Bitcoin price, push out some sales, maybe sell off some of their balance sheet and save the company. Do you think that's possible?
That is possible. Were they really struggling? I mean, are the manufacturers right now struggling? It seems to me like all of the ones that are putting out machines are selling out.
Yeah. I think specifically maybe Bitmain and Canaan. Bitmain because it's split, and both Jihan and McCree probably have some decent Bitcoin reserves. Well, I'm sure they wish they had more of that and less Bitcoin Cash, but uh,
Hindsight is
I think
2020.
the price would definitely help them as they go on to rebuild the supply chains themselves. So
Yeah, they can hire bigger armies to fight each other. Um, no, it's look. I guess I could see that, right? I certainly could see Canaan trying to do something to, increase their, share value after the year that they've had. Um, but I think also that there's a lot of holders that are, big holders with big incentives to manipulate the price. And I think that all markets are related. And although there are a lot of big holders that are Bitcoin only, there are even more big holders that are not Bitcoin only. And I think that there are ancillary markets that move when the Bitcoin markets move, and often they get forgotten or not looked at with regards to, price action of Bitcoin. And anyone that's been following markets not Bitcoin, they've noticed that Bitcoin's moved sideways while alt markets have went crazy, right? Parabolic in a lot of different cases. And these are all, tokens, shitcoins, altcoins, whatever you want to look at them as, that have big holders that also have large bags of Bitcoin. As price moves sideways, these altcoins trade at multiples, and these funds and holders are able to make a ton of money. Then you manipulate price up, and all of the positions that you've just sold, you can now buy at a 30 to 150% discount and really double or triple your positions. And then all you do is you let Bitcoin run sideways again for another few months, and you get the same run up, right? So, and most of these traders are ultimately, just stacking more Bitcoin with it. So there's, I think, that level of manipulation that the Bitcoin community, may look at with, a side eye, but, it's, as someone that looks at GPU markets and Bitcoin ASIC markets, it's clear that there's, not an invisible hand that's moving both sides of the market, I would say.
so in that case, do you think we'll see like another couple months of altcoin run-ups with Bitcoin kind of stable price, and then maybe we'll see a shift in that?
I think that we are going to see continued run-ups in Bitcoin and then pullbacks, right? I think that this cycle has been initiated. So, for a few weeks, maybe a month, we'll see some action in altcoins, and then we'll see another move up from Bitcoin. And that'll continue until Bitcoin and altcoin, those two move up together, right? Right now they don't move together. They move in the inverse direction. Some altcoins will maintain, higher lows, but whatever. In general, they don't move together. When they do move together, we're getting close to the top. That's the signal for me that, like, okay, party's over. It's time to, consider the Bitcoin top to be the next top for this market, and to, look to wait out for the next cycle. Yeah, just my theory, but theories can be wrong.
No, it makes sense. And especially as I know you talk about a lot like Ethereum 2.0, the hype being driven around that. Whether you think it's going to go through or not, I think there's definitely a lot of hype. So I don't really
Well,
foresee a place where it's not extremely like mainstream and everyone wants a piece of it.
yeah, well, and it's right now, the DeFi hype is good for miners, right? Like the Ethereum transactions, on the blockchain are nuts, and that reward is being passed on to the ETH miners. And I mean, they're banking, you know, they're doing much better than they have in a very, very long time. And that's just because of the traffic on some of these dexes that, I mean, we don't need to get into because I know a lot of people think they're bullshit, but, you know, I put out a cheeky tweet about DeFi being good for miners, and it is. Like, it actually is good for the shitcoin and ETH miners out there.
Yeah. On
Okay.
transaction fees, but we've also been seeing that on Bitcoin too. So I think right now, so the fee dominance the past 24 hours, 144 blocks has been almost 18%. That's pretty significant, coming up from, you know, 3 to 4% levels pre-halving. So Bitcoin miners are also benefiting from that. I just have like a blockchain.com chart here. You can see how crazy some of these transaction fees on a BTC level went. Obviously, like after the halving, everyone was talking about it. We saw a period there where it kind of fell down to somewhat normal levels, and now we're heading back into a period of incredibly high transaction fees again, which alleviates some of that pain for miners.
What do you attribute that to?
It's hard to exactly say. More people using the network and speculating right now, like this last current run up.
Mm-hmm.
So all the mempools are full and people are just willing to pay more to get their transactions processed. So I think this is like goes to an interesting debate going back to the forks, where like some of the reasons for the forks was to decrease transaction fees, but in an era where security is vital for a network, I think transaction fees, although uncomfortable for users, this is what secures Bitcoin long term as block reward decreases. It's this aspect of the system that will lead to high security. Coins like Bitcoin Cash that have very low transaction fees, as block reward decreases, I don't know how that network is going to be secure. There's going to be no reward on it. So unless Bitcoin Cash goes over 100K, we're going to start to see a declining hash rate on that network for sure.
I feel like we've talked about Bitcoin Cash a lot lately. We need to like take a shower after this episode and just like wash the stank off. But yeah, I wonder if there's any correlation between this and everything that's going on in the altcoin markets. You know, there's a lot of coin moving, right? And the more retail that comes in, generally they'll come in with USD or with BTC, and then they'll transfer that all over the place. You know, I mean, that's a lot. That's a big spike in transaction volume. So I'm hesitant to think, or the transaction fees, I'm hesitant to think that would be just from, you know, really, really bad retail traders, but shit, who knows? Where,
yeah.
You know,
it's a nice period though on a 3-year chart here. Like, of course, 2017 was crazy, so we haven't headed to that territory yet, but it's definitely, you know, a really nice bump here.
So wait, when you're looking at this, right, the first peak there, the first top that you see, what's the date on that? So right, yeah, that peak right there.
These were like leading up cycles of hype. I think maybe
that's
the ICOs.
That's the last alt season.
Yeah,
so this
here.
Could be. So what we're seeing now could actually be that could actually be the transaction fee spike based on the increased trading. Because I mean, alt season is good for Bitcoin, right? Like I as a trader and as someone that knows a lot of traders, like the majority of people are exiting their alts into Bitcoin, right? So that adds value. And I think that could very well be it. You know, obviously that spike is from everyone losing everything. that's like, yeah, that's homes and businesses and debt and all of that just cascading into wreckedness. Man. Anyways, this is the transaction fee part of the block is going to be more important as time goes on, right? Definitely. A couple more halvings, and we're going to need a substantial amount of transactions to sustain the network. Where do you stand on that debate? Like, what do you think is like a good percentage when it comes to the long-term adjustment for transaction fees?
I think it needs to head from what it is today at 17%, eventually to 100% in 2140 when block reward.
Okay. All right. Thanks, Ethan. Yeah. 100%. I was talking more on like the next, our lifetime, like, you know.
I'm planning for my grandkids here. No, I'm a fan of transaction fees. Users obviously don't like them and payment processors, but at the end of the day, what's more important is that we secure a censorship resistant decentralized network. And the only way to do that is to compensate people from secure it. So I think it's a necessary part of the ecosystem, and this is how miners get paid, and they put in a fair amount of work to get this reward. They're risking a lot, investing in mining farms, burning electricity, and pursuing this. So I think it's a part of the system, and it's a natural part. People will just generally use Bitcoin a bit more here. I think it's going to start to increase.
Yeah, and I know we touched on hardware a little bit before, but right now, and there's the synthetic futures contracts that are out there that are trying to price this in or guesstimate where difficulty is going to go. What are you seeing with the hardware market as it is right now? Like WhatsMiner just announced a new machine. Is that right?
Yeah, they launched the M32, which is pretty low key. I don't even have a picture for it yet here. That's how new it is.
The Canon competitor.
Yeah, they're reaching out and saying, well,
Yeah.
it's at 52 joules per terahash. Obviously, not the efficiency level that we're used to, but that's being reflected in the price, and that goes to it like an interesting trade-off, right? That miners have, and so we have a chart for that kind of to visualize that. Is that as a miner, you can usually it's a capex opex trade-off. You go high capex, latest gen, you're gonna have very low opex. Vice versa, if you go pick up an S9 for $20, you're gonna get really dirt cheap, a couple bucks a terahash, but you're gonna have that high operating cost. So I think what's minor with this M32 release is just having a lower capex, higher opex option for miners versus the M30S, which is high capex, low opex. So it's cool that they're giving some customers the option, and it probably allows them to use some old chips that they had lying around and probably couldn't put to use.
Yeah, that's I mean, I wonder if there's going to be the demand for those. I guess right now that everyone's just rushing for hardware, and I think they know this is good foresight, and actually could lend itself very well to your argument that the markets have been manipulated by hardware manufacturers. The timeliness of this release, if Bitcoin's price pushes up to 15K or beyond, every model is going to sell out. It doesn't matter, right? So what a world, man. What it all just comes back full circle. There's so many loose ends that you could tie up. I love how everything is just, left to speculation. It'd be awesome if we get some answers. Like, it would be great to have someone on and just be like, yeah, we for sure manipulated the market so that we could sell more machines. I mean, BTC King, if you're listening, can we get that on record from someone?
You gotta get the Snowden of mining come out. What's interesting though is that rigs have actually decreased in value over the past week on primary and secondary markets. So this is on the same website, Hashrate Index. We take the weekly average rig price from a number of primary and secondary sources. Primary obviously being manufacturer website, secondary being Telegram chats, WeChat channels, Alibaba groups, forums, and scrape all that data, aggregate it, and try and show it in a more concise way. So we track it every Wednesday morning. We update it. We've seen here that it's come down pretty much across the board. New gen's down 5%. Kind of mid-range gen is down like 7.5%. The interesting part is that the oldest gen, 100 joules per terahash and above, is actually up. It's up about 6.5% the past week. So there's been some turnover in those old miners that, with that recent bump in cash price, people are like, wait, actually, these could have value if you have a very local cost operation.
So what are you thinking? What are you thinking over the next couple of months? I know there's a great Telegram group that you've started that there's some engaging conversations about where hash rate's moving. What do you think how does this all going to play into some of these contracts that people are looking at in the next couple of quarters?
Yeah, let me pull up FTX here.
You gonna bring up your
FTX,
trading account? Let's see it.
don't know if I'm logged in. It asked me
That
for
would
my
be funny.
QFA. Well, I have TokenBot now integrated, so if you want, I can send you my trades.
There you go.
I'll only charge you $1,000 a month to
That's
copy trade.
perfect. That's perfect. There we go.
So FTX doesn't have that much volume yet, so it shouldn't be taken again as the Bible for the market view on where hash rate's going. But I think it's still interesting because it is one of the first ever market-based systems that we can look at. I can pull up, I don't even need to be logged in, and I can see where the market is pricing in difficulty. So that's pretty sweet. This is the Q3 2020 contract. So basically it takes the average of Q3, July, August, September, the average difficulty, and that's what it settles on. So right now it's trading at 19.098, which is really 19 trillion. So the market is expecting the average difficulty over Q3 to be 19 trillion. It's an interesting metric to look at, especially like then looking at current difficulty levels, which it's still significantly below that. So you're gonna have to expect some run up. The current difficulty right now is just below 17. So I think these markets are fascinating to watch, especially as we gain more volume.
To put in another term, right? How far out are we from the next difficulty adjustment? 10 days?
11 days, yeah.
Oh, okay. So 11 days out, for it to hit the projected adjustment would require what?
It depends how fast, right? So if it accelerates quickly, then it doesn't have to reach as high as levels, but really you need like it to be like 19 by August and like the rest of that by 21, around 20 and a half, 21 trillion. You'll need it.
Mm-hmm.
So that's given that it's at 16.8 right now, that's a pretty large jump that we're needing to see for that contract to pay off. Now it has come down pretty significantly in the past day. It was at 19.4 here? No, it was higher. It was let's look at the 5-day chart.
Look at those cliffs. Where are those coming from?
So 19.5, it's already come down. It was down to 19 this morning, but now back up to 19.1.
Yeah, there really is not a lot of volume on that, huh?
No. I think that goes to the nature of this industry. Hash rate and mining is an entirely new asset class. So in order for you to generate volume on these types of products, you need to actually nurture this. I think both of us are huge fans of Sam. Sam is a legend, but they didn't put a lot of effort into these products. They didn't really gather a lot of hype. They didn't really go meet with trading desks to start trading this. So I think you can expect this just to be another one of their kind of random trading pairs here that is listed on the far right of their website and not a lot of love put into it. I think in the future, this is going to be an incredibly interesting asset class for people to trade, but there needs to be that love put in, which you've been doing for the past 6 months.
I mean, look, man, we named our company Hash Rate for a reason. We do believe it's the most important thing that no one's talking about yet, or very few people are talking about yet, but it's going to have a massive impact on mass adoption of Bitcoin and stability of the markets overall. Obviously, you guys are doing some great things to move that forward. But, Ethan, I think that for this first episode of Proof of News, that we should look to wrap it up on this topic, because it's a great place to leave off. There's going to be a lot to cover, and we're going to be doing this every week. So once a week, you can expect us to come on. We're going to share the news. We're going to talk about our thoughts on what's going on. We're going to talk about hash rate. We're going to talk about mining, and we're going to talk about Bitcoin. And we are not going to talk as much about Bitcoin Cash. So that we can promise you. You can take that one to the bank. Ethan, do you have any final words before we sign off here?
This has been fun so far, and so if you have feedback on this first video, the content we covered, let us know. If there's stuff that we missed that you think were important to cover, just hit us up and we'll cover it next time.
Yeah, I'd love the feedback. Definitely make sure that you leave us a comment in the notes. We will pay attention to those and read all of those. Obviously, DMs on Twitter or Telegram. Let us know what you guys would like to see, and we'll just keep these things coming. So thank you guys for tuning in. And for us, we'll talk to you guys again very soon. Thanks for watching this episode of Proof of News, a Hashrate TV production. If you enjoyed this video, please consider liking, sharing, and subscribing for more great content like this every day of the week. In addition, feel free to leave a comment below and let us know who you'd like to see on the next episode. Also, if you head over to hashrate.com, you can sign up for our free weekly newsletter, Difficulty Adjustment. Every Wednesday morning, we provide you with the latest news and information on Bitcoin, cryptocurrency, and mining. Plus, each week, one newsletter subscriber will be selected at random to receive a free Ledger Nano S cryptocurrency wallet. So go ahead and sign up today. Who knows, you may be the next lucky winner. Want more from Hashrate? Go ahead and follow Hashrate TV on Twitter. It's the easiest way to keep track of our newest content all in one place. That's at HASHR8_TV. Thanks again for watching, and we will see you very soon. Please remember that all content appearing on this or any other Hashrate channel is strictly for informational and entertainment purposes only. You should not construe any such information as legal, tax, investment, financial, or other advice. Consult a licensed financial advisor before investing yours or anyone else's money.